Hello, my friends. Brett Pattison with Iron Gate Global Advisors, coming at you from the financial capital of the West. That, my friends, is Salt Lake City, Utah. Thank you for listening to this educational webcast where we're going to address something that we have to address. I don't really want to address it, but I have to. And that is the future of the U.S. dollar. And I have to bring this up because of all the attention that's getting, because of all the fear that is around the internet, the radio, as I talk to clients, as I talk to friends, as I talk to family. There's so much marketing out there being pushed on how the U.S. dollar is going to be completely destroyed, as will our market, that I have to address it today. All right, I'm going to talk about some very important things, and I hope that you're able to, based upon what we present, make up your own mind about the future of the U.S. dollar. But I would ask one thing, and that's some important advice that I can give to you. Some of the most important advice, you know, if you're managing your own money or if you're watching your advisor manage money, the advice that I would give you is investing based on your political stance is dangerous. Don't do it. I don't know of any successful long-term investors that have good returns that base it on a political stance. I just don't, right? So you've got to, right now, as we move forward for the next 10 minutes, you have to check your political stance at the door. It's critical that we discuss this topic and you do that, right? I will check my political stance at the door. Hopefully you won't even know what it is. That's how neutral you need to be in the world of investing. All right, now, let's talk about what is a reserve currency for those that don't know the importance of it. It's simple. It's a currency. It's called an anchor currency. It's currency that's held by foreign governments. It's used in international transactions. It's the world's currency to do business. Plain and simple. All right, we're talking transactions from a business perspective. We're talking commodities. We're talking, you know, those types of global transactions that help the global economy work. Now, a reserve currency must have liquidity and depth, and it must be safe. It must be a safe haven. There must be confidence in that U.S. dollar. Okay, and that's what we'll address in large part today. Both of those things, but confidence certainly. All right? So let's move forward. A couple things that is causing fear. Before I show you these two pictures that are all around the web and that everybody's flashing, you know, mostly marketing companies selling products or flashing out, or people doomsdayers that hit it, you know, right in 2008 are throwing out. And that is, before I show those pictures, understand that there's a meeting taking place in October from the World Bank. The IMF, the World Bank, to get together a couple times each year. And October 19th through the 21st, they're getting together, and that's what people believe and where people believe that the U.S. will lose its world reserve currency status and that something will take its place. That's the date, right, that people are pinpointing. So what are these two pictures that are causing fear and that people are using as marketing tactics? Well, here's one put out by JP Morgan, and that is a pretty obvious chart, you know, the history of the world reserve currency, you know, going back to Portugal and Spain, 1400, and on through, you know, Britain, up to World War II, you know, Bretton Woods, 1945, that's where the U.S., and that's where we've been ever since. Reserve currency status does not last forever. That's obvious. Now, how long will it last? Well, nobody knows. To put an average on it, or, you know, to say that you know, it's you know, the end is coming in October, you know, is, well, nobody knows. I'll just say that, right? Nobody has a clue. It could go on for another 100 years, and we don't know when it'll end. So this chart that's showing the history of world reserve currencies is causing fear. Understand it for what it is. Hey, the other picture that's causing fear comes from the People's Bank of China. They created a billboard about their currency, the renminbi, if I'm saying that correctly. We'll call it the yuan, the Chinese currency. And they put a billboard out and talk about the world currency being this yuan, right? And I'm saying to myself, well, what else are they going to put out? They're marketing their own product, right? It's all government. They're marketing a product that they believe is superior. Great, right? That's fine. Those are the two pictures causing fear. And the fear is this. The fear is that China and Russia are working together to throw the U.S. off of world currency status, which will cause a flood of dollars to go into the market, which will cause total chaos, which will cause commodities to get crushed even more so than they are now. It will cause absolute chaos, right? Market, cut it in half if that happens. And that's China and Russia's supposed goal in doing that. And there's a few pictures that are getting a lot of run that you need to be aware of. And the other thing that's getting a lot of run is something put out by Ron Paul, who all of you I'm sure know about. And he's got a online presentation that he's done with Stansberry and Associates that talk about this same topic. And you need to understand that I don't mind Ron Paul, don't agree with a lot of what he says, including this, but I don't mind him, and I don't mind Stansberry and Associates, who's putting it out. I actually have worked with them in the past on a couple projects, and think they're great guys and love the research. They're first-class people, and would consider some of them my friends. But they are putting out this material to where Ron Paul says the tipping point for the U.S. dollar losing its world reserve currency is this. If investors lose confidence in the U.S. dollar, that's it. If investors lose confidence in the U.S. dollar, then boom, it's over. Chaos ensues. So that's what I'm going to address just for a few minutes. That confidence and what the landscape looks like right now. Current global currency reserves. So the current global currency reserves, that's a tongue twister, look like this. You've got 66% of the reserves being the US dollar, 23% the euro, 4% the pound sterling, and 4% being the yen, Japan, right? Pound sterling being the UK, and then you've got 6% in other. If you look at that, you say, okay, well, the US dollar is the anchor currency. You've got the euro, which all the transactions between European countries, it's how the EU works, that makes sense. And then you've got the other pretty large economies of the world being Britain and Japan, right? And then a bunch of others. So that's where it currently stands. The other thing that I would pinpoint to you is something that's ugly. It's an ugly chart that I'm going to share with you. And I share it for a reason. And it's going to show you what that 66% looks like. Who owns the U.S. dollar? Who owns Treasuries, right? And this comes from Treasury.gov, and it's ugly, but it's a historical list going back a year of the amount of Treasuries that are owned by different countries. And a couple things is, and you can pause the recording and you can look at it in detail to judge for yourself. But we're hearing a lot in the news today about China selling all their treasuries and trying to flood the globe and start that process of the dollar losing its world reserve currency. And it hasn't really fluctuated. I mean, it hasn't changed for really a year from May to May. It's still at $1.27 trillion. And May 2014, it was at $1.27 trillion. And it's going to ebb and flow. And it's going to ebb and flow for this reason. China is an emerging market. They're growing like crazy. They need to trade with people, right? With other countries. That's been the last decade. Now, China is slowing down. And so if they do indeed sell off some of their treasuries, get rid of them, don't need as much, it's simply because they're not growing as fast, right? Here's what it looks like a little close up. This is where China stands, 1.2 trillion. They are the largest holder. They're the world's largest economy. That makes sense. You've got Japan being number 2. You've got the Caribbean banking centers, Bahamas, Bermuda, Cayman Islands, Virgin Islands. It's where the uber wealthy have all those offshore accounts. There are 3. Oil exporter countries. That makes sense. Ecuador, Venezuela, Indonesia, Saudi Arabia, those countries that deal with commodities mainly. They need dollars because it's really easy to make transactions. And then you've got Brazil, Switzerland down the line. That's where we stand now. All right? And I'm going to bring back this notion of China holding all this, all these treasuries in a moment. But what I want to think about now is the alternatives to the U.S. dollar. If in fact the World Bank decided to use and to implement a new world currency, what are the different alternatives? Keeping in mind this, we need a currency that is liquid and deep and a currency that we have confidence in that could be a safe haven, right? So here's our options. We've got the euro, which, a month or two ago, it was discussed that the euro was going to break up. So not a lot of confidence coming from the eurozone, right? Greece, Italy, all sorts of problems going on there. Although, things are looking up, I don't have a lot of confidence in the euro. The pound sterling, great. There's, Britain's, UK's coming along fine. Economy seems to be recovering, just like the U.S. The problem is its liquidity, and not a ton, right? It's not deep enough. You've got the yen. Not a whole lot of confidence in Japan and what's going on there. You've got the other alternative, which is the yuan, which is the Chinese currency. And here's the thing about China is nobody even trusts China. We don't even know if the data they're putting out is good. The MSCI World Indexes wouldn't even add China to its benchmarks, as far as domestic shares of their stock market. You have a bear market going on. You have a government which manipulates everything. Not a whole lot of confidence in our friends in China. So I guess you could cross off the yuan. The other idea that Jim Rickards' death of the dollar that he always talks about is a basket of currencies, which has some legitimacy, right? Let's get the yuan, let's get the yen, let's get the euro and the US dollar. Let's make 4 currencies in a basket of currencies. And Russia, our friends in Russia and China apparently are pushing for this, as people in China have said. And that makes probably the most sense. You can't just take over the yuan, just can't take over. But even then, think about what's happening, the 2 countries that are pushing this idea. You've got Russia, which is in total chaos because oil's been cut in half. And, when oil in Russia is trading for $100, you've got the government making money, you got the mob making money, and everybody's happy. When oil's at $50, you've got the government making money, but you have the mob not making money. And so you could say that Russia's not doing great right now on many levels. And we've already mentioned China, right? They're not doing great. So why would the World Bank listen to these 2 countries and completely change things to add a country that is in chaos? That doesn't make a whole lot of sense to me. But here's the thing. we've looked at all these other currencies and we've kind of written them off because of confidence, because of liquidity. What about our own U.S. dollar? Remember what Ron Paul said. He said if investors lose confidence in the U.S. dollar. So why would they lose confidence in the U.S. dollar? Here is a U.S. debt, 18 trillion, lower left, upper right, ugly. But here's what you need to remember, right? And don't get me wrong, I don't like that much debt. I think the government can certainly do a better job than what they're doing as far as spending and all that kind of stuff, right? And again, check your political stance at the door. The fact is, to be a reserve currency, you have to have debt. I'll say that again. To be a reserve currency, you have to have debt because you need foreign countries to own treasuries to do business. That's what they do, right? And here's another look at the debt. China owns $1.2 trillion of that, right? Of U.S. treasuries. Japan, 1.2, right? So think about this for a second. What would happen if China pushed the U.S. out because they wanted it? Well, they got $1.2 trillion on the book. Do you think they want to lose $1.2 trillion? I don't think they do. That's what would happen. This debt that these countries own would be worthless. They would lose money, right? That's what would happen as far as debt levels go, right? So not great as far as the debt situation in the U.S. I will be the first to admit it, realizing we have to have debt because we're the world reserve currency. Also realizing that those other countries on that list that we just looked at are a whole heck of a lot worse than we are. A whole heck of a lot worse than we are, right? All right, so let's take a look at this. Here's the other thing. Will they lose confidence? Well, here's the S&P, Standard & Poor's credit ratings for the countries we've talked about. You got China, AA-. You've got the European Union, AA+. Japan, AA-. The outlook in China is stable. The outlook in Japan, negative. And I threw our friends Russia in there. They're BB positive. Negative outlook. That's great. You got the UK, which is AAA, which is the best. And then you've got the US, which is stable at AA positive. All right, so from a confidence perspective, taking into account these credit ratings, why would I go to China or why would I listen to Russia, right? Not a whole lot of confidence in those other countries. More confident in the U.S. than anything else there. The other thing, from a confidence perspective, is interest rates. We hear a lot about interest rates and the fact that as interest rates go up, which is the plan come September, most people believe, that as interest rates go up, the dollar will be just thrashed. And I want to bring up some historical data. And again, this is an ugly chart, but I'm going to explain a little bit more. There's three things there. There's a blue line, which is the U.S. 10-year government bond interest rate. Threw that on there. Okay, but the two most important are the yellow line, orange line, which is the Amex dollar index level. So that's the dollar. And then you've got the effective federal funds rate, which is the red line. All right? That's what the Fed deals with. And I want to point out that when the Fed funds rate goes up, the dollar goes up. There's an instrument right there. Fed funds rate goes up, dollar becomes worth more. Fed fund rate goes down, dollar becomes worth less. Up, up. Down, down. Right? And right now, the far edge of your chart there, you can see that the Fed funds rate is still down, but in anticipation of September, the dollar is starting to gain some strength. So the fact that the dollar losing value because interest rates will go up just doesn't make sense historically. That hasn't been how it's historically, gone. And I trust that history of those two components rather than theories, right? Look at it yourself. Okay? And as we round out this discussion, squashing, I believe, the notion that the dollar is people are losing confidence in the dollar. I've got to ask the last question, which is, what does the IMF and the World Bank want? What do they want? They want this. They want global trade without chaos. They want safety. They want a safe haven for companies and countries and to do business. And will switching to a basket of currency provide that? When those four currencies, two of which are a little sketchy. Will going straight to the yuan do that? I believe no. I believe the goal of the IMF and the World Bank is to avoid chaos and to provide the safety and to create a safe place for the global markets. Now, the other side to that is you'll hear people and doomsdayers not give that any thought whatsoever. Think about what their whole goal is, right? It's not to cut the U.S. market in half. With that, I'll leave the ultimate decision up to you, right? Understand this. Relax. We can take it from here. Don't get caught up into these headlines. Relax. We'll invest based upon what we're seeing in the markets. And the U.S. dollar losing its reserve currency is probably something you're not going to have to worry about. Okay? If it is, we'll do something about it. Low probability. With that, check out our education center on our blog. I've got a lot more on these topics and more in our blog. Check it out. Thanks for listening. If you have any questions, email me, brett@igga.com, brett@igga.com. You can see the other ways to get a hold of me as well. Thanks for listening.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.